Oh crud, we're recording. Hello and welcome to the Stocks with Tusky YouTube channel, YouTube's favourite capitalist pig. Today I thought we would go through a bit of a run through of one of the companies I hold, being Energy Transfer LP, but a bit of a disclaimer first. I am not a financial advisor. This is not financial advice. Please do not buy stocks based on what people on the internet are doing, and please do your own research. That being said, let's get into it. So, Energy Transfer LP is my boomer oil stock. They are an oil and natural gas pipeline that are based out of Texas and focus on transporting natural gas from the various areas where they're produced to where they can be used and exported. So there's been quite a bit going on with this company recently. They have had to raise a lot of money to buy out one of their competition, which is going to allow them to essentially hook their pipelines directly into the competing pipelines and thus make them a lot more efficient in getting their product across the United States. This has caused their credit rating to tank a wee bit, and management unfortunately had to cut their dividend in half. That is not accurate, by the way, but if we have a look, it was cut from 30 cents a share down to 15. Normally something you would hate to see, but they're doing it for all the right reasons. I don't mind them doing that if it's to pay down debt, because that's just a prudent business decision, and it is to fund expansion. Now, this has been rewarded recently in the share price, but it was also down to a large storm that hit Texas. Now, Energy Transfer had spent a decent chunk of money in the past winterizing all of its equipment, which not all of their competition did. As a result, when this massive storm hit Texas in the middle of winter, it knocked out natural gas supplies to the state for their competition. But not for them. They could just throw their staff into overtime and continue to supply natural gas for the purposes of electricity generating and heating, of course. This also was because they have large storage facilities, and they were able to bring those online and pump gas into the state as needed. Now, as a result, it's sort of woken up Texas to the fact that these storage facilities are actually pretty damn useful, and a lot of their customers rather, are looking at even doubling how much of this storage space that they are using, and thus Energy Transfer moving forward has been able to charge a lot more for the privilege. Thus the large uptick in share price that we've seen recently. Management were planning on paying down this debt as quickly as possible, but this has just really stuck a fire under it and accelerated things. So eventually they will be looking at increasing that dividend back to where it should be, and also doing a share buyback to counteract a lot of the dilution that happened when they took on that debt, because it did involve them raising equity. So we'll go through the numbers a bit on Simply Wall Street, but a lot of these I don't necessarily agree with. Simply Wall Street's fair value, for example, has been known to throw off some absolutely wacky numbers, but that being said, I do believe the company is still significantly undervalued. They are right about the high level of debt, and the unstable dividend track record, of course, is due to cutting the dividend reducing the dividend for the right reasons, being the one-off items impacting financial results. So if we go down, it tries to compare 1 year return, but we are in June at the moment, and comparing anything to this time last year when we were in the midst of the virus, whose name, if I mention, will get me yeeted off YouTube, is an exercise in futility, basically. That was when the market was right in the toilet, so none of these numbers are particularly helpful. I actually have the fair value of this at around $13 a share, which is still undervalued, but dear God, Simply Wall Street, I do not understand how they've gotten $24 a share out of that. I'd be thrilled. I'll be absolutely thrilled if it goes to $24 a share, but I don't see it happening, at least in the next year. This is quite helpful though. The company's price to earnings is 8.3. The average for the industry is 17, so maybe that's where they get their $24 a share from, but as I said, I'd love it, but I don't see it. Analysts seem to think that that the growth is just basically going to die off in the future. I don't see that either, given how much the company is expanding. But even if that's actually true, once dividends return to a normal level, this is going to be a fantastic dividend play. We'll get down to the dividend information momentarily. Sort of don't like that, but yeah, this is the interesting part. The amount of debt that they have to their equity is rapidly reducing, and I believe this is even a wee bit out of date. It hasn't, yes, that's from March 31st, so it's not even taking into account the recent earnings report that's come out. The dividend, so keep in mind that this dividend has halved, so over the next, they didn't put a time frame on it, which is annoying, but I'm thinking over the next year or two we'll be looking at that going back to a 11% dividend over the next few years, which just makes this a company where, like, I'm already up over 50%. I am quite happy to just keep this company as a nice little cash cow for myself. We have some information on the management. I don't see it's particularly relevant what the CEO earns, unless it was something outrageous, but Simply Wall Street provides all that information anyway. But the last thing that I really wanted to look at for this stock, which is very useful, is this. We can see no insiders are selling over the last 12 months, and oh boy, US $2 million that insiders have bought over the last 3 months. So this is board members, well, what is it? Bradford Whitehurst is the chief financial officer. But yeah, insiders in the company are snapping up these shares. It also gives you a nice ownership breakdown. Institutions holding the shares are a good thing because they are likely to just be holding it for the dividends like I intend to. So you're less likely to see them flooding out of the stock unless something goes significantly wrong. But that's about all I wanted to cover on the company. Let me know what you think of it in the description, and if you would like to see more of these individual stock, I don't want to call it stock analysis because it's just my quick opinion on it really, to be honest. But yeah, it is a company that I've looked into quite extensively, and a company that I will be continuing to buy. As we can see here, I'm up 52.9% on this company as of time of recording, and I'm still intending to grow this position further. But anyway, that's all I have time for. See you guys in the next one.